typical top management team of a firm comprises of Chief Executive Officer, Chief Finance Officer, and Chief Operating Officer, among others. In the past 2 decades, executives responsible for corporate sustainability, hereafter referred to as CSEs, have been showing up in a growing number of top management teams across the globe. Appointing of CSE to a firm's top management team signals a strong support and conviction from the firm's leadership to incorporate sustainability within the corporate strategy. By being actively involved in corporate decision-making, a CSE can enable the adoption of effective sustainability practices that increase revenues, decrease costs, lower risks, and enhance competitiveness. As a primary executive with responsibility over the firm's sustainability strategy, a CSE can provide stimulus for sustainability-related changes across all business units. In this study, we investigate whether the strategy of appointing CSEs is valued by investors. We also examine specific conditions under which the stock market reaction to CSE appointments is more or less positive. Our empirical analyses are based on a sample of 115 announcements of CSE appointments made by publicly listed firms between 2000 and 2018. We use event study methodology followed by regression analyses to test our hypotheses. Before presenting our empirical findings, here are a few notable characteristics of the CSE appointees in our sample. For instance, 30% of them are women, and the mean prior work experience is 23 years. We find that the average stock market reaction to CSE appointments is insignificantly different from zero. That is, the hiring of CSEs has no discernible effect on stock prices. However, we find that the stock market reaction is contingent on certain announcement, firm, and industry-specific conditions. The data reveals that the CSE appointments have a positive impact on stock prices in two scenarios. The first is when a firm's announcement of a CSE appointment has more specific and focused details on the role's responsibilities. These responsibilities can include ensuring regulatory compliance and ensuring occupational and environmental safety and health. When firms are more specific about the role of the CSE appointee, it shows that firms have identified a clearer path to becoming more sustainable. And it also helps reduce uncertainty among the investors about some of the technical and managerial complexities associated with sustainability objectives. The second positive impact is for the firms that have faced an adverse sustainability-related event in the prior year. Such an incident could include a chemical spill or an accident that results in death or significant property damage. Hiring a CSE after such an incident signals that the firm is taking the commitment to sustainability more seriously. The data also reveals that in one situation, appointments of CSEs has a less positive impact on stock prices. This is for firms in heavily fined industries. In such industries, it could be harder to convince investors that this type of appointment is going to make a real difference, even if it is well-intentional. In addition, when compared to the benchmark firms that did not announce CSE appointment, the sample firms show significant improvements in return on sales and total cost over sales in the 2-year period after a CSE appointment. Overall, our findings not only support the strategy of appointing CSEs to top management teams, but also they enable executives and stakeholders to more deeply understand the shareholder value and operating performance effects of appointing CSEs. Future research could analyze the environmental and social performance realized by firms subsequent to CSE appointment.